All right, second attempt. Let me delete the other. I think I already deleted it, to be fair. But yeah, all right, second attempt, because when I'm going through and I'm doing my analysis, I want you guys to be able to hear me. I don't want to be sitting back. The mic is nah, the mic is just a bit. You know what? I got this mic stand, right, and it like clamps onto the table, but it's not really. It's like kind of short. The mic is quite heavy, so it's like resting on my table. So you're gonna have to bear with me. Anyway, today we're going to go over the move. We're going to study the move, what happened today on NQ. We're going to keep it very, very simple. It's going to be a very short video. This is going to be the first video uploaded onto Discord. Yeah, it's going to be the first video uploaded onto Discord. This is basically what we're looking for in price every time we go to trade. This setup forms every single day. It's an ICT concept. I trade purely ICT, nothing else. And it's all about time and price. Down here, we've got time on the X or Y axis, forgive me. We've got time, and then we've got price. So that's all we're looking for. At this specific time, and you can see with this indicator here, it's called ICT kill zones. You can see I've got this set to my settings for the times I'm looking for. 9:30 is when I'm looking for my setup, and I usually trade till about 11 o'clock. So that's that. If we zoom out, we can go to the 1 hour, and we can see what price has been doing throughout the week. It's Thursday today. If we zoom out even more, go to the 4 hour. These are my drawings or these are my annotations for price as a whole. So I'm looking at this right here. This is a liquidity void gap on the weekly time frame. If I zoom all the way out to the weekly time frame, you can see that this right here is a void. Why is it a void, Annie? Why is it a void? Basically, because you can see that this body of this candle didn't overlap with this candle at all. There's just a complete void. This is on the highest time frame that I look at, the weekly. The big money moves on the higher time frames, I've realized through my time of doing this. And so you can see we've made the void, we've come down, filled it, tested it, used it as resistance, came down, took out a whole bunch of liquidity, just swept this low here, come back up. You can see it's been used as resistance again, come back down, and then we've shot through this liquidity void here, and now we've tested this weekly fair value gap, which was my target pretty much for the whole week. I was bullish all week looking at these highs. I wanted them. I got them because I get what I want. No, but seriously, if you're following price action, you can see that there was some smooth highs up here. I wanted them to get ran. We came down, we made some displacement coming up over these highs. We inverse this daily fair value gap here. We inverse this gap here. We shot above it. We used it as support. We didn't come down and use this daily fair value gap as support, to be fair. So this is a breakaway gap. We inversed this, came down, tested it, shot above, made a little void here, which of course we're going to come down and test again, probably next week. And so yeah, this is pretty much it. But looking down on the lower time frames, the 4 hour, we've got no annotations. You can pretty much see that what we was looking at on the higher time frames is still going on the smaller time frames. And I will speed this up. So on the 15, this is what I was watching. You can see we've had a little bit of consolidation over the last day or so. From the 17th, 18th, we had a little bit of consolidation. We broke out above that. And you can see we've just been trying to test this weekly fair value gap. Go down into the 5 minute. This is where the good stuff starts, I promise. So, 9:30 is when we start trading. All I am looking for is a run on liquidity anywhere inside of a macro. So you can see that this happened here at 9:30. If I log into my broker and show you the executions, I was trading getting chopped around here because I didn't stick to my rules. And I thought I saw an entry here. I didn't. I think I got, yeah, it was a bit long. But anyway, Once 930 came, we can see this low got raided. This is money. Really and truly, this is money. Right here. Run on liquidity into a higher time frame PD array, which is the 1 hour. If you go into the 1 hour time frame, you can see it's a 1 hour. If you haven't noticed already, all I use to trade is fair value gaps. That's all I'm looking for, is fair value gaps. I don't trade any order blocks. I very rarely trade order blocks. All fair value gaps. But I trade them a little bit differently to how everybody else trades them, because I wait for a run on liquidity first into a higher time frame fair value gap. Now, once I see this, I'm not getting in here. I want to see the reaction off of this level. And I mainly want to see a reaction off of the higher part of this level, the higher part, the higher quadrant of this level. First 50% of it. Once I see that, then I can go down into a lower time frame and start trying to look for my entries. So after I see this run, we've left a displacement here of a SIBI, bearish fair value gap. We've taken out this low already, money. Once we see displacement to the upside and inverse this and get a candle closure above, then I know that this is a change in state of delivery or a market structure shift, or you know what I mean? This is my signal that price is looking to go in the other direction. Once I see this, of course, we have a BISI right here. Price trades down into it. This is my drawdown because I'm getting in on the candle closure. So as I get in here, price is coming down again here. I see this here. I scale in down here. Once I see, let me use the GAN box for this, the 50% get tested. So once I come down, once I see this and I see a rejection off of this level again, same as this, I say, okay, this is what I want to see. I'm going to scale in. And I might scale in down here and take my profit at the break-even level here. But because we have equal highs here, and you can see this on, look at this candle here. If you look up here, right here, hopefully you can see that. You can see the level here at 0.3275, and this one is 0.3275. So we've got equal highs here. So if I get in here or here on 1 or 2 contracts, once price comes up to here and here, I'll be scaling out. So if let's just say for instance, I'm trading with micros and I get in on 2 micros here, right? I would always want to scale one here, move my stop to break even, and let the runner run to here and buy side. If I get in here, I'll have 1 contract to sell here, 1 contract to sell here, done. Put my stop below here, let it go. If I see a breakdown here, I can most likely get in again here, sell here, sell here. Same thing. Stop below here, stop will be in the same place. And that will be the scaling. Price literally gave us a little bit of a pullback into this BISI here. This was just before 10 o'clock, but during the 10 o'clock time as well, it gave us one last push into that level. Get rid of this. And then it just flies. It flies, gives us a scale here. If we wanted to get in on the scale here and get in again here, it's a little bit of an order block right here. You could have tapped in on the inversion here. Of course, scale some, or scale some here, scale some here, and then buy side. What I was looking for the whole week was this weekly fair value gap. And if we look at the weekly fair value gap, we've got it. We've come back down to test this level, this order block around here as well, perfectly. And again, if I'm only looking for fair value gaps, you can see that this tiny level here, right here, where did price respect? And where did price respect the 50% mark of it? Now I'm sure that's random. Okay, so we got that. And if we wanted to get back into the trade to maybe take price to here, maybe we won't get it, but I'll tell you what is a good level to take profits at if you get in here and you see price go up. Here. This high here. 12225, 12225. What is that? What does that say? Right here. What does this say? What's this candle's high? 12225. All right. Now what's this candle's high? 12225. Equal highs. So I would have marked that out, and then I would have got in here. We would have had to hold a little bit of heat if we didn't scale some, maybe like here or something. But this again was respected. This little bissy right here, wicked, yeah, does the damage. But if I was looking on maybe ES, maybe we got some kind of SMT there. Yes, we did. This is a 2-minute time frame. This is a 1. So let me go down to the 1 minute on this time frame. You can see this low did not take out, oh, sorry about that, that low. And if you can see on the, from here, that's this candle here. And you can see the line on the other side. So this candle here did not take out that low right there. And that's SMT. So we're trading NASDAQ. This is S&P 500. So once I see this candle here get printed, and I see on the S&P that low gets taken out as liquidity, but it doesn't get taken out on NQ, and then we get some sort of setup on here, like a fair value gap that gets inversed, closed above, and then respected, we can target this candle here, which is this candle. So that would have been my high that I would have been looking to take out after we retraced. And that's pretty much my model. You can see on here, and I'll make this bigger again for you. This is the same model. We got a touch into a 1 hour higher time frame fair value gap. We've taken out liquidity. I want to see buy side get taken out, and I want to see this weekly fair value gap get hit. So I'm bullish. Every trade I'm taking today is going to be a buy. I don't care if this gets respected. I don't care. As long as this doesn't break, I'm bullish. We get an inversion here. The candle closes here. I get in. I could scale in down here. I don't think I did today. I'll take my profits here. 1 contract, 1 contract. If you're trading with 3 contracts, 1 contract here, 1 contract here, because this is a speed bump here, because this is a fair value gap. Take one here, take one here, take one here. Or you could not take one here, just 1, 2, 3. So it's very easy to see where your TP levels are when you're trading this strategy. And it's very easy for risk management, because as soon as we hit the first internal high, which is this one, we'll peel off some profits and then we'll move our stop to break even. Bang. So this would have been, sorry about that. This would have been a break even trade. We would have got this, and then price would have come down and stopped us out here. Now, the trade is still valid, so we could have got in again here. As soon as we get in again here, we've got another high. So we'll take one out here, take one out here. Same thing. Same thing. So it's very good for risk management. It's very good for spotting your entries. It's very good for market executions when you want to get in on trades. That's basically my strategy in a nutshell. Hopefully I haven't made this video for too long. I was waffling out parts, but hey, this is going to be the first video in the Discord. That was the move today. It is the 19th of September, 2024. This happens every day. So when I'm doing breakdowns, it's going to be a lot of this. It's going to be the same thing, different variations of this. Same thing every single day, and it won't stop. So that's all. See you next time.